Let's get across the market open. Mark Garner joining us from MPC Markets. Mark, happy Monday to you. Big week ahead on the international calendar with central banks meeting, of course, the key one being the Fed.
Yeah, we got the Fed on Thursday morning, or Wednesday night. Well, Wednesday will be the last time you can make any portfolio adjustments. But yeah, we've also got Bank of Canada that night, expected to give us a 25 basis point cut. The Fed's essentially a laydown for a 25. There's probably about a 10%, maybe 15% chance of a 50. I'm of the opinion that 50 basis points is a bit more likely than the market's expecting, as you know, those employment numbers, etc., and that massive revision down of 911,000 jobs. The Fed may have concerns over the weakening labour market. And, you know, there's been a lot of political pressure being put on Fed members, Lisa Cook being fired, etc., whereby, you know, they may just want to take some pressure off themselves and essentially have a, you know, just do 50 in one go, because the likelihood is they're going to be doing 75 to 100 over the course of the cycle. So, you know, why not take some political pressure off themselves and just go 50 straight up?
So that's clearly a focus for investors. Look, of course, the other thing being AI, that thematic that continues. And we saw that last week, particularly with Oracle striking those deals. It's all out the outlook. What are you seeing there?
Yeah, I think that Oracle earnings was a bit of an Nvidia moment, really. I mean, you can see here in the forecast for their revenue. I mean, it's only 10 to 18 billion each year for the next couple of years. But you can see why people are making such a big deal out of that outlook. That revenue forecast for their cloud infrastructure is just exponential for the next 4 or 5 years. So their multi-cloud database revenue grew 1,500% in Q1, and they've got 34 multi-cloud data centers now live. They'll deliver another 37 for a total of 71. What that means for, like, I think that what it means for the broader thematic is it'll be all of the fringe bits and pieces for data centers. We're going to need copper. We're going to need, you know, you can't really invest in water on the ASX, but a lot of the water providers are very key for you know, for data center expansion and power management. But of the two big data center players in Australia, you've got NextDC and obviously Goodman's. And I just did a little bit of a deep dive into what their relationships were with Oracle in particular. And you know, Goodman's has got a strategic partnership to not only build out but house Oracle infrastructure, whereas NextDC's just, they've got a partnership there, but it's more so just to roll out their products and have access via their Axon, you know, infrastructure, so or ecosystem. So I really do think Goodman's is potentially undervalued here at the moment, and you know, we've seen NextDC go on a bit of a run, but if those Oracle numbers are even close to being right, it's going to be super beneficial for Goodman's over the next 4 or 5 years.
What else are you seeing locally at the moment, Mark? What are your expectations for the week ahead for the share market? I mean, data-wise, pretty quiet. We do get labour later in the week.
Yeah, I think labour, even the US retail sales on Tuesday, Wednesday is going to be, you know, largely sort of overlooked because we've just got that cluster of central banks. We've got Bank of England as well as Bank of Japan. Nothing expected out of them, but I think everyone's going to be in a little bit of wait and see mode until the Fed at least, and then, you know, the labour market, the jobs numbers here, they might make a ripple on the day, but I think we're all very much focused on what the Fed's going to do. And yeah, so I would expect us to be in a bit of a holding pattern leading up to, you know, leading up to those numbers. The SPI was off about 0.6, 0.7 on Friday night. There was a bit of, the Nasdaq was up, but there was a bit of weakness broadly across all the other indexes. So I'd expect it to be fairly quiet. We've got industrial production today from China. That's around about midday. That could see a bit of buoyancy in the materials sector potentially. And you've got the likes of, the wire ETF hitting 52-week and record highs here at the moment. So obviously there's expectations globally that we're going to see copper prices go up. So if there's any green shoots come out of that industrial production today, we may see a little bit of recovery in the materials sector. But we've got our eyes on silver and gold particularly. Silver, has broken up and made a fresh 14, 15-year high on Friday night, around about $43. And, when silver tends to run, it goes quite exponential. So it's only around about 18% away from that record high, which if you've looked at past moves in silver, they can happen very, very quickly. And the 50-year average for silver and the gold-silver ratio with gold at these prices is even further. So it's about 43% away. So we'll be keeping a close eye on that as well. Things like polymetals or the ETF are probably your best play there.